Greetings everyone, you're listening to Connor Murphy here. I'm just going to go through the charts again as it's been one hell of a week. It's the week of crazy at the moment. We've now seen the US dollar finally break through support here. Now I got in on this big bearish candle here because I thought that was great sign of downward movement. So I got in at the bottom here. I had to hold on for something like 47 days, and now we're starting to see it head right down. But there's people who are joining in that I know at the moment, such as Scott Andrews, the guy we do the podcast together, Trade Talk. We do that every week. But there's people who are coming on board now, and those who are a bit late. I just want to go through some technicals and some fundamentals with you and things that you need to worry about. So we're having some really great downward momentum now, but the American dollar is starting to do really well, as we can see here, but it's not so much technically it's doing great, but fundamentally probably not so much. It's not that the American economy is doing so well, it's just that other currencies are doing so poorly, such as the euro, who are having trouble with Turkey at the moment. Not that Turkey's part of the euro, but they've lent a lot of money to them, and so there's a little bit of instability around those markets at the moment. But I just want to show you, these are things, if you're a trend trader like Scotty and I are, you need to start to worry about trends. So here's a trend here. We could probably even bring it out to here if we wanted to. Okay, so we have applied that trend line, and then another trend line perhaps you'd want to do is maybe this one here. There's that trend line. But look, these are the trend lines where people start to get in and it starts to worry. Trend line here. Now, experienced traders know that a trend like that can't keep going on forever. Sooner or later, that bad boy is going to come down, and when it does, it normally doesn't come down slowly. It normally comes down on quite an angle. So this is something you need to be worried for. Also, too, you can see this sort of support level here that I'm talking about, this green line. If it goes through there, the next bit of resistance it'll have to get through, spot will have to get through is here, and if it doesn't get through there, then it's going to have, if it does get through there, then it's going to come down, in my estimation, to probably about here. So, and then the party's over. So if you actually look at the fundamentals, although I just trade the technicals, but if you look at the fundamentals and some evidence to back up what I'm saying about, it's not that the US economy is doing so well, the US dollar is doing so well, it's just that everything else is doing badly, the euro especially. Here I've got the market margin debt ratio of the S&P 500. So you've got the actual real growth since 1995 and the margin debt, and the real growth is somewhat what you would describe as steady, where the real growth seems to look like it's on steroids. But this is the interesting part that one must understand, is they really take off and they really go down. Really takes off, really goes down. Now look what's happened here. Here it looks steady, but here it's really taken off. This is the same sort of tangential line, the same steepness as this crash and this crash, but however it's gone up and it's zigzagging and it looks like it's going to go up further. Well, that can't last forever. Then you've got the US federal debt to GDP ratio, and it's about 105 at the moment percent. The most it's ever got to like 120, but that was after the Second World War, so they had to pay back a bunch of debt for funding a war. And then slowly but surely it came down. Well, there's no war. They're not funding a war at the moment. They're just funding more debt. So yeah, they keep they keep spiking the punch bowl, getting themselves drunk, but sooner or later there's going to be a hangover. So we've got that as well. And then you've got, of course, the US dollar national debt clock, which is roughly at around about $21 trillion that the US owes. Mainly that China has bought their bonds. Sooner or later, they're going to want their money back. The chickens are going to come home to roost. So if you look, the other interesting technicals that I'm looking at the moment is gold. You see, gold has just got the similar sort of downtrend. Really, we've got that big engulfing candle here, and it's going further down. Now, I wouldn't short gold, and this is myself, just myself, shorting gold and being long the US dollar. It's kind of the same trade if we look at them closely. So that's not to say that because when I'm trading on the foreign exchange, I'm using leverage in order to make money off moves. So if you wanted to hedge against maybe some sort of impending doom into the future, something like going to the Perth Mint, you can look at. You've got some pretty good prices at the moment for gold and silver. They're at pretty low historical lows, so you don't have to buy a whole bunch, but this is something that people may or may not be interested in. If we go back to the charts, the USD seems to be going downward. I think the cable is going down pretty strongly. I think some of the CAD, Euro CAD is going down, so that's still just the euro, right? US CAD, yeah. Great British Pound CAD. So the Great British Pound showing some strength against the CAD. So these are all trends that are happening at the moment that people need to be aware of if they're trying to get onto trends. Like I said, the trend is your friend until it ends. But these are all just things that people just take into consideration. Thank you for listening. Everyone's been great. I'll talk to you next time. I'll most likely be talking to you with Scotty Andrews when we do our next Trade Talk podcast. Until then, bye y'all.